Okay, so imagine this. You're about to buy something big, a car, or maybe your first house even. But then, oh, your credit score isn't good enough.
Yeah, that can definitely be a roadblock for people.
For sure. It can be super frustrating, too, right? Credit scores can feel kind of mysterious, like a secret code or something.
It's true, a lot of people feel intimidated by the whole credit system.
Totally. But the good news is anyone can build excellent credit even from nothing. And that's exactly what we're going to unpack today.
Absolutely, and that's where our deep dive source, Building Credit from Scratch, comes in. It's like our guidebook for this episode.
Exactly. And even if you've never had a credit card or maybe you've had some bumps in the road financially.
Yeah, you can still turn things around. It's never too late.
Right on. So before we get into the how-to, let's break down the basics. What even is a credit score? What makes this three-digit number so important?
Well, think of credit as like a financial report card. It shows how well you handle money you borrow, and that score is like a snapshot of how trustworthy you are to lenders.
Makes sense. So the higher the score, the better, right?
Exactly. A higher score tells lenders you're more likely to repay a loan, so they're more willing to give you better terms.
Okay, so like a lower interest rate on a mortgage or a car loan.
Precisely.
Yeah.
And that can save you a ton of cash over time.
For sure. So good credit means you're more likely to get approved for loans and get those better deals. Seems like a no-brainer.
It really is. It can also open doors for renting an apartment, and even some jobs look at credit history now.
Wow, didn't realize that. Okay, so let's flip the script. What happens when you have bad credit or no credit history?
Well, it can make things a lot harder. Getting a loan might be impossible or come with sky-high interest rates. Even finding a place to live can be a struggle.
Sounds like a real catch-22. You need credit to get credit, but how do you get started if you don't have any?
Right, and that's where those strategies from Building Credit from Scratch come in.
Okay, I'm ready to dive in. Let's start with secured credit cards. I've heard those are good for people with no credit history.
They are. Secured cards are kind of like training wheels for credit. You put down a deposit as collateral to open the account.
So it's like you're guaranteeing the lender you'll pay them back.
Exactly. That makes them more willing to give you a chance even with no prior history.
So you're not actually spending that deposit right. It's more about showing you can use the card responsibly.
Right. The key is to make small purchases and pay your balance in full and on time every month.
And those on-time payments are what helps build your credit score.
Exactly. That's what gets reported to the credit bureaus and shows them you're reliable.
Okay, that makes sense. So consistency is key. Got it. What about becoming an authorized user on someone else's card? I've heard that can help boost your score quickly.
It can, but you got to be careful with this one. When you're an authorized user, you get added to someone else's account, and their credit history becomes part of yours.
Wait, so their good habits help my score?
Yep. But here's the catch. If they have bad habits like late payments or maxing out their card, that hurts your score too.
Oh, wow. So it's really important to choose someone who's super responsible with their money.
Absolutely. Make sure they have a good credit history and are good with their finances.
Okay, noted. All right, this next one from the guide sounds interesting. Credit builder loans. Borrowing money to build credit. How does that even work?
It might seem counterintuitive, but it's a smart move. With a credit builder loan, you borrow a small amount, but you don't get the money right away. It's held in a secure account until you've paid back the entire loan.
So you're making payments on money you don't even have access to yet.
Right, but those consistent payments show lenders you're reliable. And those payments get reported to the credit bureaus, which helps boost your score.
So it's like forced savings and credit building all in one.
Yeah, you could say that. It's a good way to prove you can handle a loan responsibly.
Interesting. So it seems like the main theme here is showing lenders you can be trusted with credit, even if you don't have a long history.
Absolutely. These strategies are all about building that foundation of positive credit behavior.
Okay, that makes sense. Now, the guy also mentions a few other ways to build credit, like student loans and those department store credit cards. What's the deal with those?
Yeah, those can be options too. But they come with pros and cons, so it's important to weigh those carefully and see if they fit your situation and goals.
Right, not every strategy is right for everyone.
Yeah.
So how do we choose the best options for our individual needs?
That's where understanding those golden rules of credit building comes in.
Okay, perfect. Because I'm ready for some actionable advice. Let's get into those rules.
Welcome back. So we've talked about some solid strategies to start building credit. Now let's get into those golden rules. The guide calls them non-negotiables, which I kind of like.
Yeah, it really drives home how important these habits are. So what's the #1 rule for building good credit?
Hands down, it's paying your bills on time every single time. No excuses. This goes for everything: credit cards, utilities, loans, the whole 9 yards.
Makes sense. Payment history is a big deal for lenders.
It is. They want to see that you're reliable and that you honor your commitments. So paying on time is the best way to show them that.
Right. So what are some ways to make sure those payments don't slip our minds?
Setting up reminders is key. Whether it's on your phone, in your calendar, or through your bank's website, whatever works for you.
Oh, and automatic payments. Those are a game changer.
For sure. Taking the human error out of the equation is always a good idea.
Absolutely. Okay, so we've got paying on time down. What else should we be thinking about?
The guide talks a lot about credit utilization. Do you know what that means?
Yeah, credit utilization is basically how much of your available credit you're using. It's calculated as a percentage of your credit limit.
Right. So for example, if you have a credit card with a $1,000 limit and you spent $300, your credit utilization would be 30%.
And keeping that percentage low is important for a good score.
Right, exactly. Ideally, you want to stay below 30%. That shows lenders you're not maxing out your cards and that you're managing your debt well.
So it's not just about paying on time, it's also about how much of your credit you're using at any given time.
Precisely. Lenders like to see that you're using credit responsibly, not relying on it too heavily.
Okay, makes sense. So paying on time and keeping balances low, those are two big ones. What else is there?
Another thing to be mindful of is hard inquiries on your credit report. Every time you apply for a new credit card or loan, the lender checks your credit history.
And those checks can impact my score.
They can. Each hard inquiry dings your score a little bit. It's not a huge deal if it's just one, but if you're applying for credit left and right, it can raise red flags.
So don't go crazy opening new accounts all at once.
Exactly. Pace yourself and only apply for credit when you truly need it.
Makes sense. Now, what about those store credit cards? They always try to tempt you with discounts.
Oh yeah, those can be tricky. While store cards can offer perks like discounts or rewards, they often come with really high interest rates.
So you might end up paying more in interest than you save on those discounts.
Exactly. It's important to read the fine print and make sure you understand the terms before signing up for any credit card.
Okay, good to remember. So we've talked about using credit cards responsibly. What about co-signing on loans?
Co-signing can be a big decision. When you co-sign for someone, you're basically agreeing to be responsible for their debt if they can't pay it back.
So it's not something to take lightly.
Definitely. If the primary borrower defaults on the loan, it can damage your credit score and you could be on the hook for the money.
Yikes. That's serious. So before you co-sign for anyone, think long and hard about the potential risks.
It's always best to err on the side of caution when it comes to your finances.
You're telling me, okay, this is all making me realize that building credit is more than just knowing the rules. It's about discipline and patience.
It is. Building good credit takes time and effort, but it's so worth it in the long run.
Right. It's like anything else in life. The more you put into it, the more you get out of it.
Exactly. And remember, you don't have to do it alone. There are resources available to help you along the way, like credit counseling agencies.
Well, that's a good point. Sometimes having a little guidance can make a big difference.
Absolutely. Okay, so we've covered a lot of ground in this deep dive. We've talked about strategies, habits, and mistakes to avoid. What's sticking with you so far?
Honestly, I'm realizing how much I didn't know about credit. It's not just about getting approved for loans, it's about setting yourself up for financial success.
Exactly. Building good credit is an investment in your future.
That's a great way to put it. So what's next in our credit journey?
In the final part of our deep dive, we'll talk about some inspiring success stories and leave you with some final thoughts to keep you motivated on your path to financial freedom.
All right, so we've talked about how to build credit from scratch and some key habits to keep in mind. Now let's talk about some common mistakes people make along the way. Things to watch out for.
Yeah, even with the best intentions, we can sometimes slip up. So let's shine a light on some of those pitfalls.
Okay, so what's the first mistake we should try to avoid?
One of the biggest ones is not checking your credit reports regularly.
Oh yeah, those reports. They can be kind of intimidating to look at.
Yeah.
But we should be checking them right.
Absolutely. You're entitled to a free report from each of the 3 major credit bureaus, Experian, Equifax, and TransUnion, every year.
Okay, so we can get those for free. But why is it so important to actually look at them?
Well, you want to make sure there are no errors or inaccuracies. Even a small mistake can drag down your score.
So it's like double-checking your bank statement to make sure everything's correct.
Exactly. It's about being proactive and making sure your credit report is an accurate reflection of your financial history.
And if we do find a mistake, we should dispute it right.
Yes, definitely. You have the right to have accurate information on your report, so don't hesitate to contact the credit bureau and get it fixed.
Good to know. Now, we talked about hard inquiries earlier. Is there anything else we should be careful about with those?
Yeah, another common mistake is applying for too much credit all at once. Remember, each time you apply for a new card or loan, it creates a hard inquiry on your report.
Right. And too many of those can make it seem like we're desperate for credit.
Exactly. It can raise a red flag for lenders. So it's best to space out those applications and only apply when you truly need to.
Okay, so slow and steady wins the race when it comes to credit.
Yeah.
Got it. Now, what about those tempting store credit cards? We talked about the high interest rates, but are there any other downsides?
Well, they can be a slippery slope. It's easy to get lured in by those initial discounts, but if you're not careful, those high interest charges can quickly outweigh any savings.
So it's important to really think about the long-term costs before signing up.
Definitely. Don't let those shiny perks cloud your judgment.
Good advice. Now, this next one can be tough, but what about co-signing on loans for family or friends? Is that ever a good idea?
Co-signing is a huge responsibility. You're basically putting your own credit on the line for someone else.
Because if they don't pay, you're the one who's stuck with the debt, right?
Exactly. And that can seriously damage your credit score. So it's not a decision to make lightly.
It sounds like you really need to trust the person and their ability to repay the loan.
Absolutely. And even then, it's important to weigh the risks carefully.
Okay, so co-signing is a big no-no, unless we're absolutely sure about it. Makes sense. Wow, this whole conversation has been so eye-opening. I'm realizing that building credit takes more than just knowledge. It takes discipline and a lot of patience.
It does. It's a journey, not a sprint. But the rewards are definitely worth the effort.
For sure. It's like building anything worthwhile. It takes time and dedication.
Exactly. And remember, you're not alone. There are resources available to help you along the way, like credit counseling agencies. They can provide personalized guidance and support.
It's like having a financial coach in your corner. That's awesome. So as we wrap up this deep dive, what's the one thing you want our listeners to take away from all of this?
Building good credit isn't just about numbers. It's about creating a more secure and stable financial future for yourself. It's about having options and opportunities.
I love that. It's about taking control of your finances and building the life you want.
Exactly. Imagine a year from now, you're ready to buy that dream home or finally take that big vacation, and your credit score is no longer holding you back. That feeling of freedom is priceless.
That's a great way to put it. It's about achieving your goals and living your best life.
Exactly. So remember, it's never too late to start building a brighter financial future for yourself.
And on that note, we'll wrap up this deep dive into building credit from scratch. Thanks for joining us. We hope you learned a lot and feel empowered to take control of your credit journey.